Dell is up 104% on the month. Datadog 85, Supermicro 75, CrowdStrike 62. Every other trading channel will put those names on a top 10 list this weekend. The Confluence method rejects all of them. Today, the 5 S&P 500 stocks, the method actually qualified for May 2026, why the hot names got cut, and what the screener tells you about the market right now. Before any stock can be qualified, it has to clear the same 4-signal bar every swing trade on this channel does. Price action above a rising 50-day moving average. Key level closed above the prior 60-day high. Momentum RSI between 50 and 70 and rising over the last 5 sessions. Trigger at least one daily close above the previous day on volume 1.5 times the 30-day average. Across the entire S&P 500, only 5 names cleared all 4. Here they are in order of monthly return. Robinhood Markets, ticker HOD, finished the month up 32.4%. The chart tells the story. Price has been above a rising 50-day for weeks. The recent close at 94 cleared the prior 60-day high at 93. RSI climbed from 47 5 days ago to 69 today, and there were volume-confirmed trigger candles on both May 28th and 29th. 444. Not the biggest gainer on the list, but the cleanest structural setup the screener found. RVTY, ticker RVTY, is up 27.1% on the month. A healthcare name leading what has been a mixed sector. Same 4 boxes, trend above a rising 50-day, close at 104.5 cleared the breakout level of 103. RSI rose from 54 to 68 in the last 5 sessions, trigger candles on May 28th and 29th. Worth knowing because healthcare leadership tends to be defensive. When this sector starts qualifying, the market is rotating toward quality. Invesco, ticker IVZ, up 11.9%. An asset manager name that catches a bid whenever index inflows pick up, beta to a rising market. Price at 28.46 just edged above the 60-day high at 28.38. RSI rose from 56 to 67, and there was a single but clean trigger candle on May 29th. The lowest RSI of the qualified group, meaning the most room left to run before momentum gets extended. Broadcom, ticker AVGO, up 10.2%, the only mega-cap technology name in the qualified group, which is itself a clue. While the rest of tech is in melt-up mode with RSI in the 80s, Broadcom's RSI is 66 and rising healthily. Trend above the 50-day breakout cleared, fresh trigger on May 29th. A reminder that you do not have to chase the parabolic names to be in the leading sector. ROST Stores, ticker ROST, only up 3% on the month, but it qualified and that matters. Consumer discretionary has been beaten up. A name leading off a base inside that sector with RSI rising from 56 towards 60 is exactly what early sector rotation looks like. Trend reclaimed, prior high taken out, momentum building. Catch this kind of setup early enough and the run lasts months, not weeks. Now the trap. 45 S&P 500 stocks scored 3 out of 4, close to qualified, but not quite. Almost every one of them failed the same signal, momentum. RSI above 70, often deep into the 80s, meaning the move is mature and the easy money is already booked. These are the names every other channel will put on a top 10 list this weekend. The method says no. Let me show you why on the 5 biggest names you will see everywhere. Dell Technologies, up 104.7% on the month. Congratulations to anyone who caught the start of that move. It is real, and the trend on the chart is gorgeous. But RSI is 89.4. That is not where you initiate. Historically, RSI above 85 on the daily resolves with a pullback before the next leg, not after. The method is not saying short Dell. It is saying do not be the buyer at the top of the move when the pullback is the actual entry. Datadog, up 84.6%. RSI 87.5. Same story, slightly different tape. The trend is in full force, but there is no fresh entry signal left on the chart. Anyone who wanted to be long got long 30 days ago. Right now you are paying the latecomer premium and the chart is telling you so. Put it on a watch list for the pullback into the rising 20-day average. That is where the method comes back and looks at it. Supermicro, up 75% on the month. RSI 79.5, slightly more reasonable than the others. but the rejection here is on a different signal. No volume confirmed trigger candle in the last 5 sessions. The move is intact, but the latest push has been low conviction. Without a fresh trigger, the method has nothing to act on. This is the textbook RSI pins in a trend pattern, and you wait for the next pullback's bounce, not for the chase. CrowdStrike up 61.6%, RSI 83.8. Cybersecurity has been the leading subsector all month, and CrowdStrike is the cleanest chart in it. But again, the easy entry is behind you. When the leadership is this extended, the method assumes a digestion phase is closer than the next leg up. Watch it, do not chase it. NetApp up 60.4%, RSI 91.9, and this one is the clearest reject of the 5. Historical RSI readings above 90 on a daily chart resolve with a mean reversion move 90% of the time within 10 sessions. That is not a forecast, it is base rates. The chart is beautiful. The setup is gone. The method makes you wait for what the chart is statistically telegraphing. So 5 qualified 45 that came close but failed on the same signal. The story is not which stocks to buy, it is what the method tells you about the market right now. When only 5 names across the S&P 500 clear all 4 signals, and most of the failures are on extended momentum, that is a late cycle tape. Stay selective, respect the rejections, and wait for the pullbacks to bring the rejected names back into qualification. Subscribe for next month's watch list and trade your own plan. Education, not financial advice.